The Olympics are over and most of Europe is on the beach, but some things don't change. There's no let-up in the Eurozone crisis as the recession in Greece turns deeper into outright depression. Well, for this week's Euro Crisis Watch, I'm joined by Keith Wade. He's Chief Economist at Schroders. Keith, dismal Greek GDP numbers today, 5 years of recession. Athens is never going to meet its deficit targets.
Well, that's probably right. I mean, what we saw today was another big fall in GDP in the quarter. And the economy now has been in recession for some 5 years. And I think what this illustrates, though, is the difficulty, some would say the futility, of trying to get out of this debt crisis through continued fiscal tightening. All it seems to be doing is driving the economy weaker and weaker. And, of course, that's undermining the fiscal austerity itself because it's increasing spending on benefits and unemployment and so on.
Yet, having said that, we had officials from Germany and Belgium over the weekend calling for precisely just that, more austerity.
Well, that's right, yes. I think the ECB comments were quite interesting. They're from the governor of the Belgium Central Bank, and a bit surprised actually to hear those comments. I mean, you can understand where they're coming from. Clearly, they don't want to start buying bonds and then for countries then to stop doing any fiscal consolidation whatsoever. He quoted the example of Italy as a case in point. But clearly what we have seen throughout this crisis and what we saw most recently is that markets respond much more favourably to signs of ECB intervention. That's why yields came down so sharply over the last couple of weeks, really driven by the comments from Draghi and some of the points that he made from his ECB press conference. They're not responding to more and more calls for fiscal austerity.
Now, the ECB sat on its hands in terms of bond buying again this week, 22 weeks in a row, and there's no sign of any intervention from the ECB, certainly this month. Everyone's on holiday. So what do the next 2 or 3 weeks hold?
Well, there's not an awful lot going to be happening over the next 2 or 3 weeks, and really we're waiting till September now before we really see any action. I guess the next highlight in August would be the August the 20th. They have to roll over a Greek bond. It's about 3 billion that has to be rolled over. There isn't expected to be a big problem with that. That bond happens to be owned by the ECB, so that should happen. But then we're waiting till September, and it's really the German Constitutional Court on September the 12th which has to make a decision about the legality of the ESM. And if that isn't ruled to be legal, then we could be in quite a difficult spot of bother with a referendum in Germany needing to be called.
Now, we're talking about GDP. We had Q2 numbers today from Greece. Tomorrow, it's a string of Eurozone countries, including Germany. It's not looking very pretty there either.
Well, no, it's not. I think Germany may just eke out a positive number, but one of the things that we have seen in the last month or so are signs in the surveys that Germany is beginning to slow down and could well dip into recession. So we saw that from the purchasing managers' indices, for example, which have fallen quite sharply. And of course, with the world economy slowing down, it's not really surprising that a big exporting nation like Germany is slowing. But I think that could be quite crucial because we've often felt that Germany will be more sympathetic to the calls from the peripheral countries in Europe if its own economy was suffering too. So, maybe that slowdown in Germany may not be such a bad thing after all.
As we mentioned, it's obviously mid-August, and you mentioned Italian and Spanish yields and how they've responded to Draghi's comments. Italy still below 6%, Spain 10 years still below 7% just. Neither country will make a formal request for aid this month, right?
Well, we're not expecting them to. They could. I think the door is very much open to Spain at the moment. Certainly comments from the IMF were suggesting that Spain would not have to implement any more austerity in order to qualify for a package. It's pretty much doing everything that they would need. So it is possible that we might get something before the end of the month from Spain. Certainly don't think we'll see it from Italy, though.
OK, Keith, thank you very much and enjoy your summer as well.
Thank you very much.
My thanks there to Keith Wade from Schroders. Tune in at this time every Monday for our weekly analysis of the latest twists and turns in the Eurozone crisis. I'm Jamie McGeever. This is Reuters.